Hey everyone, welcome back to Corporate Decoder, the place where we turn confusing company reports into something you can actually understand. Today we are looking at Blue Owl Real Estate Net Lease Trust's latest quarterly report. This company is all about renting out properties to big businesses. It's like being a landlord but on a massive corporate scale. Get ready for some serious number crunching and maybe a few surprises in today's report. Before we dive in, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come say hi. First off, let's talk about the forward-looking statements. Basically, Blue Owl is giving us a heads up. They're sharing the hopes and expectations for the future, but also reminding us that things can change. They use words like expect, intend, anticipate, but also warn about risks like changes in the real estate market or tenants not being able to pay rent. It's a standard disclaimer, but it's important. It means everything they say is not a guarantee. This is even more important because a major way to get rid of your shares is through the share repurchase plan. Now, let's jump straight into the good stuff. The financials, I'm going to scroll to the condensed consolidated balance sheets Here we get a snapshot of the company's assets, what it owns, and its liabilities, what it owes as of March 31st, 2025. So most interesting item here is investments in real estate net, which is close to $3 billion. This is the meat and potatoes of what Blue Owl does, and it's how they make their money. If we compare with December of last year, we can see that it actually decreased by a bit, nearly $50 million, meaning either their properties lost value or they sold some of it. Another interesting figure here and much more healthy is investments in unconsolidated real estate affiliates. It jumped nearly $500 million, meaning Blue Owl is betting big in this area. We'll come back to this point in just a bit. Next, to understand how the company performed over the last 3 months, let's scroll down to their condensed consolidated statements of operations. In here, we'll quickly look at revenue. We can see their rental revenue is at $55.7 million for the quarter, up from last year. Nice income from investments in leases, on the other hand, decreased from $14 million to $10 million. Not so nice a one. Huge difference year over year is income from unconsolidated real estate affiliates, going from $33 million to $10 million. Not so nice. One huge difference year over year is income from unconsolidated real estate affiliates, going from $33 million to 1/4, up from last year. Nice income from investments in leases, on the other hand, decreased from $14 million to $10 million. Not so nice. One huge difference year over year is income from unconsolidated real estate affiliates, going from $33 million to 1 so nice 9. What these financial statements don't show is how much money the company has. That's where the condensed consolidated statement of cash flows come in creation. Operating cash flow is the lifeblood of any business. Operating cash flow increased significantly year over year, and this is very important. From $37 to $85 million, what's important about cash flows that these guys are a REIT and have to return most of their profits to shareholders who are counting on the income. If we scroll down to the cash flows from investing activities, we can see they are spending a lot of money buying investments in real estate debt, around $330 million. This makes the debt holders happy and provide good returns. As for the cash flows from financing activities, this is how the company manages its debt and its shares. During the period, they made a net positive addition in capital of nearly $500 million. The company primarily gains capital from proceeds it gets from issuing its stock. This is very important for the health of Blue Owl. Now let's move on to something called the DST program. Blue Owl is doing something clever here. They're packaging some of their properties into these things called Delaware statutory trusts and then selling pieces of those trusts to other investors. It's a way for Blue Owl to get cash now while still managing the properties in the long run. It's complicated, but the idea is they get upfront money and someone else gets the potential upside, and NLT Operating Partnership, NLTO PEV, gets the profit and continues operating the property. Win-win-win-win. Remember those investments in unconsolidated real estate affiliates on the balance sheet? Well, those really went up since December. Part of that comes from their growing investment in a company called Store Capital. Blue Owl owns a good chunk of Store, around 19%, which in turn owns thousands of properties across the US. It's like Blue Owl Real Assets bought an additional piece of Store, resulting in a 51% indirect ownership interest in Stored, resulting in a 51% indirect ownership interest in Stored, resulting in a 51% indirect ownership interest in Stored. Time to talk about debt. Every big company has it. As of March, Blue Owl's total debt is close to $1.6 billion. If we scroll down to the mortgage notes and credit facility, we see that they are paying close to 6% on their unsecured debt. That's still relatively high, but not astronomical given current market conditions. Interest rates can make or break a real estate company, so let's keep that in mind. Now, regarding liquidity or how much money they have on hand, Blue Owl says they're doing fine. They've got cash, access to credit, and can sell off assets if needed. This is good, as it means they can cover their immediate expenses and keep investing. What about credit quality in those real estate debt investments? Well, if we scroll down, we can see most of those bonds have good ratings, investment grade to good quality, meaning they are unlikely to default on their mortgages, very safe. What are senior notes? Those notes allow big companies to borrow money from lenders, and the series of ABCs just to stagger them through maturity. We also learned some details about share repurchases. The company is authorized to buy back shares if some people want out. In general, numbers that are non-GAAP should be taken with a grain of salt. The presentation of these non-GAAP measures should not be considered in isolation from, as a substitute for, or as superior to the financial information presented in accordance with GAAP. The report literally says, this being said, FFO is still a meaningful measure to look for, but keep what was said above in mind when making conclusions. Okay, that's the detailed breakdown. Now let's step back and see what this all really means for Blue Owl. First, what are the key strengths? The company is expanding its portfolio, making smart investments in unconsolidated affiliates like Store, and managing to keep a decent amount of cash flowing. This shows they're actively growing and adapting in a tough economic climate. However, here's where things get a bit tricky. The debt is still very considerable even though it was reduced compared to previous periods. The risks about possible defaults should also be taken seriously. So what's the overall direction? Blue Owl seems to be navigating a challenging market, but appears to have a clear strategy for growing. They're diversifying their investments and getting smart about managing debt. Alright, that's our breakdown of Blue Owl's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.